You look at the odds. If you're going to trade, we want you to be right 80% of the time. Okay? You're going to be right. But you must accept that 20% of the time, you're going to be wrong. But you don't know where you are. Because when you look at the market, how do you know whether you're at the 80% part or at the 20% part? Okay? And that uncertainty is what kills traders in the market. Okay? That uncertainty. So let's just have a look. If you're going to be trading, alright, a half times a half, out of the 80 and the 20, 80% right, 20% wrong, okay? It's a mathematical certainty that 2 times out of 4 trades you will be wrong, okay? And that's where I get this calculation. A half times a half is equal to, right, so half times a half times a half, you're going to get 3 baddies out of how many trades? 3 baddies out of 8. Alright? Keep playing the game. 1, twice, 3 times, 4 times. This is looking better. 4 out of 16 trades, you're going to be wrong. That's not a bad hit rate. Okay? But when you are wrong, make sure that your losses are minimal. And that's what the strategy will allow. It is going to be your saving grace in the market. If you don't do this calculation, and if you don't work it like this and keep playing the game, don't give up. Okay? The minute you get a bad trade, don't say, oh no, the market's not for me. I'm not doing this anymore. Now I'm going to do Herbalife instead. Okay? Keep playing the game. Remember, you're the casino now. You've got the positive expectancy. So, let's look at our example. Our game is, we're buying a share 10 Rand, and our stop loss is at 8 Rand 50. Okay? So, our risk per share, okay, is the difference between our entry price and our stop loss, which is equal to 1 Rand 50. So if the share gets to 13 Rand, okay, we've risked 1 Rand 50 and we've gained? That's right. So we've got a risk to reward ratio of 2 to 1. In the beginning, it doesn't always happen like that. Okay? As you get more and more experienced, your risk to reward will be a little bit bigger. Okay? It's not the hit rate, guys. That's not what's important. It's not how many times you get it right. That's just one factor, but it's not the most important factor. The most important factor is the risk to reward ratio. Okay? Everybody okay with that? Any questions? So successful traders will do this over and over and over. Doesn't matter what share you're looking at. It works on everything. Now, George Soros wrote a book called The Alchemy of Finance. When I first listened to it on audiobooks, I didn't understand what he was talking about. Okay? But he said in that book, and it's important, that it's not important how much you make when you're right. It's how much you lose when you're wrong. Okay? And like typical gamblers, we like to count the money. Okay? Don't count the money. Focus on your losing trades. How much are you losing when you're losing? Okay? And then you will see the money will just start rolling in. Don't focus on the profits. There's just an example how we look at the risk on the actual share itself. Here's a daily graph on ABSA. Let's say, for example, we got an entry at that level. We put our stop loss at that low. Okay, it's the lowest low at the bottom. So the difference between the entry and the stop loss is our risk in rand terms. Okay? There we found ourselves another entry. We put our stop loss at the recent low. A lot of people would like to calculate stop loss in terms of percentage. It's not advisable. Okay? Let the market show you where the stop loss is. Alright? Because if you have a percentage stop loss, you can find that your risk to reward ratio is going to be totally out of whack. Okay? Because it's maybe too big or it's too small, you could get taken out intraday. Some shares like Anglos, Sasol's and Bulletin have the potential to move 20 rand a day. Okay? And if you invested in a penny stock, let's say for example it's 1 rand. 5 cents move on that 1 rand is a huge move. It's like 20%. Or even 15%. Okay? Too much. Too much. So it's very difficult to gauge your risk if you're working on a percentage stop loss. Let the market determine where that is, and it's normally at the recent low.